Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation and the focus of the Options-Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And just to be clear, I will be talking about setups in an underlying asset like the S&P 500 futures or Apple stock or Tesla stock. And those setups can be taken any number of ways with shares of stock, futures contracts, or options contracts. And again, my thesis, my planning, my analysis is based on the options market, but the setups can be taken any way you choose. And questions and comments are welcome, and I will be watching the Options-Doug chat channel in Discord and the chat in YouTube for your questions and comments. So please post your questions and comments, and I'll do my best to answer. All right, what I want to cover today, my agenda for today, first of all, go over news items, economic data, events, and earnings for today and for the rest of the week. And then I'll go through my positional analysis. Then I'll review a few key setups from the morning, the S&P 500, NASDAQ, and then a few stocks. And then we'll take a look at the live market and see if we can see any setups or see what's happening in the live market. All right, let's get started. So first of all, news items today. There was some news that came out this morning. And let's just take a look at, the live market here. Let's go to the S&P 500. And there was a slight reaction to the data this morning. First of all, at 9:45 a.m., manufacturing PMI data came out that was lower than expected, less than 50, indicating contraction. And then the services PMI came out better than expected, and that was greater than 50, indicating expansion. So data came out at 9:45 and at 10 a.m., minor reaction. All right, for the rest of the week, the big event is tomorrow, and that is the FOMC minutes that will be released at 2 p.m. Eastern Time, and that will be at the halfway point of my session tomorrow. So we'll stop whatever we're doing and watch the futures at 2 p.m. And then NVIDIA reports after the market closes tomorrow. And then Thursday, GDP comes out at 8:30 a.m. Eastern Time. And then finally on Friday, PCE data and durable goods come out at 8:30 a.m. Eastern Time. And then Michigan consumer sentiment at 10 a.m. All right, so let's start with positional analysis now. So that was the news items for today and the rest of the week. So in the morning session, actually before I go into this chart, let's take a look at a larger time frame. So I'm going to go take a look at SPX, and this is a 30-day 1-hour chart for SPX, just showing price and key levels. So let me point out the levels on this chart. So first of all, with a dashed purple line, I have the lower and upper edge of the expected move for the week. And then this dashed blue line is showing the lower and upper edge of the expected move for the day. And note that SPX is trading below the lower edge of the expected move for the day. And let me point out some Spotgamma levels. Now, these horizontal dark red lines, these are provided to Spotgamma subscribers for a variety of platforms. Here we're looking at a Thinkorswim chart. So I'm going to point out the key daily levels that I follow. First of all, there's the put wall at 4,000. That's the strike with the largest net negative gamma that can be expected to act as support. And hello JEC, glad you're here. So there is the put wall at 4,000, and then is the next level up is the absolute gamma strike at 4150. That's the strike with the largest absolute gamma. And then just above that is the volatility trigger. As JEC points out, SPX is now trading below the volatility trigger. And the volatility trigger is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to increase or enhance volatility when market makers are trading with price. And there was some discussion, some questions in Discord from this morning about positive and negative gamma, and I really don't assign that much of a directional edge to positive gamma or negative gamma. The market can move both ways in a negative gamma environment and a positive gamma environment. And now I think Spotgamma does assign a little bit of a bearish edge to an index market trading below the volatility trigger and positive above the volatility trigger. And the volatility trigger again is Spotgamma's proprietary gamma flip level, negative gamma below, and positive gamma above. In a positive gamma environment, market makers have to trade against price, and that tends to subdue volatility. So that's the main thing that I look at regarding the volatility trigger and positive and negative gamma. And then finally, the call wall is up at 4,300. And that's the strike with the largest net positive gamma that can be expected to act as resistance. So those are the Spotgamma proprietary daily levels, as well as the upper and lower edge of the expected move for the day and the week. All right, let's take a look at another Thinkorswim chart, just so we can focus on the levels. And this is a Thinkorswim chart, 1 day, 1 minute, showing the levels that are in play for today. And primarily, again, is the lower edge of the expected move for the day, as well as the volatility trigger. So now SPX is trading below the volatility trigger, and presumably has shifted to a negative gamma environment. And by the way, SPY is already, at the beginning of the day, was already trading in a negative gamma environment. We'll look at that in more detail in a couple of minutes. All right, so let's take a look at Bookmap now. And in the morning session, it was very, very quiet with the S&P 500 trading between SPY 417 and 418. So let me point out my columns on this chart, and I have my own cloud notes here. These are Spotgamma cloud notes. These are mine, the C levels, and I'm showing key SPY levels, and that is the 418 volatility trigger. And notice how many times that acted as resistance today. And this just shows how key the SPY levels are to the S&P 500, whether you're looking at SPY itself or ES futures. In this ratio, the SPY to ES ratio changes a little bit every day. I have a think script that calculates it automatically. All right, so again, in the morning session, 418 volatility trigger resistance, and the 417 level was support until finally breaking lower around just after 12:30. All right, so those are the levels that are in play, and now it looks like maybe the 416, 415 level for SPY are in play. And then here is the lower edge of the expected move for the day, as well as the 4170 volatility trigger that was also noted as support in the Spotgamma AM Founders Note. And we'll look at setups in a few minutes. All right, so that's the S&P 500. Let's talk about the NASDAQ now. And for the NASDAQ, pretty similar price action. Let's just take a look at a QQQ chart. I'm going to have to rearrange this a little bit. So this is QQQ, a 1-day, 1-minute chart in Thinkorswim, showing the round number levels as well as the Spotgamma levels. So the Spotgamma level in play for today is this 335 L3 level, and that is also the absolute gamma strike for QQQ, 335. So a key level for QQQ. And similar to the S&P 500, trade in the morning was in a narrow range between QQQ 336 and 337 until it broke lower about the same time the S&P 500 did. All right, so let's go take a look at Bookmap now. In the Bookmap, for NQ, I have my cloud notes levels again. So there's the 337 level that acted as resistance. And the 336 support. And now the NASDAQ is also trading below the lower edge of the expected move for the day. So price broke below, and then that acted as resistance. So now price is trading below the 335 absolute gamma strike. So again, very important to keep track of the ETF levels on your futures charts. All right, so that is those are the primary indices that I follow: the S&P 500, the NASDAQ. There were just a couple of shifts in levels. Basically, for SPX, no shifts in levels. For SPY, no shifts in levels. I'm talking about the volatility trigger, put wall, call wall, and absolute gamma strike. All those levels remained the same from yesterday. So let's take a look at the absolute gamma levels. And we'll start with SPX. So for SPX, the put wall remains at 4,000. This chart is showing positive gamma or call gamma above the zero line with the orange bars, and put gamma or negative gamma below the zero line with the blue bars. And this is the strike with the largest net negative gamma that can be expected to act as support, and then the absolute gamma strike at 4150, strike with largest absolute gamma, and then the call wall is at 4300, strike with largest absolute or net positive gamma, although there is more call gamma. Orange bar is larger at the 4200 strike. Alright, so that is the SPX. All the levels remain the same. Let's take a look at SPY. And for SPY, again, the levels remain the same. Volatility trigger at 418. Absolute gamma strike at 420. And that appears to be the center of the universe for SPY right now. And the call wall up a couple of points at 422. And the put wall remains at 400. So the range for SPY, 400 floor and 422 ceiling. And that was expected to act as resistance today, according to Spotgamma. All right, let's take a look at NDX. And before I do that, I'm going to need to refresh this page. Let's go to NDX. And for NDX, the center of the universe is the 13,850 strike. And that is the absolute gamma strike as well as the call wall. And the volatility trigger shifted higher up to 13,175. And that is not actually shown on this chart. And then QQQ. So that was one of the two shifts in levels for today for these index products. And then finally QQQ. We'll take a look at this. Zoom in just a bit. So for QQQ, the volatility trigger also shifted higher from 334 to 338. So here's the volatility trigger. And for QQQ, 335 is the absolute gamma strike. And the put wall remains at 327. Oops, right here. No. Not a lot of gamma, but this is taking the difference between the put gamma and the call gamma, so that net negative gamma is there at 327, and then the call wall remains at 340. All right, let's take a look at one other thing. While we're on this page, we'll go to the Vanna model. I'm going to take a look at SPX. And I like to look at this chart every day because it gives me a sense of how market makers may have to hedge. So what this is showing is market makers' delta notional or delta exposure on the vertical axis and how it changes with price, shown on the horizontal axis. And the gray curve is showing how market makers' delta notional changes with changes in price. And that is the, this line again is showing delta change with price only. And what this is showing is if price increases, market makers' delta notional will increase, and they'll have to sell futures. And that's typical of a positive gamma environment. And then this purple curve adds implied volatility to the equation. And that is showing how market makers' delta notional will change with changes in price and implied volatility. And that's the Vanna effect, the change in delta with a change in implied volatility. And this curve is showing as a price increases, market makers may have less delta notional to hedge than predicted by the delta only curve. And then on the other hand, as price decreases and implied volatility increases, they will have more delta notional to hedge. So as price decreases in a negative gamma environment, they'll have to sell futures with price to hedge their delta exposure. So let's take a look and see where SPX is trading now. So remember, the last time we looked, SPX was below the volatility trigger at 41.70, and also SPY was below the volatility trigger at 418. So right now SPX is trading around 41.62. So somewhere around here where I'm holding my cursor, this vertical line. So this is showing as price decreases, market makers' delta notional will increase and they'll have to sell futures, and that tends to enhance volatility and when they're trading with price. On the other hand, if price starts to increase and implied volatility drops, market makers' delta notional will drop, and they can buy back some of their short futures. So this is how this works both ways in a negative gamma environment. So that this will provide, in the case of price increasing, a tailwind to price up to a certain point, and then market makers will have to start selling futures again. And let's just see how this has shifted the last couple days. And one thing to keep in mind is market makers' gamma notional for SPX is still positive, but it has decreased over the last 3 days. So let's go back a couple of days. So there's a more positive gamma environment, slightly less negative gamma environment, and then again a slightly less negative gamma environment. Still positive for SPX. All right, so let's take a look at those numbers. So what I'm talking about is this gamma notional, and there's another measurement, this Spotgamma gamma index. This is for SPX, SPY, NDX, and QQQ. This is market maker's position at the beginning of the day. And this is showing that again, gamma notional is positive for SPX, although less positive than yesterday, so it did shift down. And for SPY, it is more negative than yesterday. And then for QQQ, it actually shifted. It's still negative, but not as negative as yesterday, so a shift down in SPX and SPY, and a shift higher, but still negative for QQQ. All right, so Take Profit and YouTube asks, why is Hero Gamma positive and Vanna negative? So I'm not quite sure I understand your question. We'll take a look at Hero in just a minute. So I know that at least earlier today that Hero was positive. That's delta that we're looking at with Hero. So when Hero line is rising, market traders are taking positive delta positions, and Vanna is really what we're looking at is market makers' position on the gamma curve, whether that's positive or negative. And Vanna is just, again, the change in delta with a change in implied volatility. And it helps us to predict how market makers may be hedging. All right, let's move on now. So that is the That's the information that goes into my positional analysis for the indices. Based on this, I was looking for a range day today. Directional bias neutral. No shifts in levels. There was really not enough to assign a directional edge one way or another. And then finally, for volatility, I was looking for moderate volatility, more than the last couple days, since gamma notional is shifting from more positive to either less positive or negative. All right, let's take a look at some setups. So I'm going to start with Hero here, and this is for the S&P 500 combined signal. So this is what Take Profit is asking about. So first of all, this chart is from Spotgamma Hero, showing price with the white line, Hero, the Hero signal, hedging impact of real-time options, HIRO, and this is showing a combined signal for the S&P 500 for SPX, SPY, XSP, and ES futures. And again, this is hedging pressure or hedging flow. So this is showing for the combined signal, and it's really SPX, SPY, and ES futures. It is positive. Let's take a look at the individual components of the signal. So first of all, let's take a look at SPX. And I'm looking for the SPX signal. There it is. So remember, the total signal was about positive 1.7 billion. So SPX positive. So traders have been, it looks like, taking positive delta positions in SPX. Positive 450 million. SPY, that's negative 189 million negative. And then ES futures, very positive 1.5 billion positive to get the total signal. All right, so let's zoom in on this. So really, as far as trading setups, options traders in the S&P 500 were not helpful this morning. They were maybe early in the morning. Remember when early in the morning, the S&P 500 was trading in a very narrow range between 417, SPY 417 and 418. And this was really just supporting longs. With Hero rising, you know that traders are taking positive delta positions. And market makers are buying futures to hedge those. So in this case, taking these long setups on pullbacks, or that trend day fade trades favored longs. But there were good trades, short and long, between 418 and 417. All right, so let's go take a look at Bookmap. Let's go back to the S&P 500. I'm going to zoom in on the morning session. Expand this just a little bit. So this is the morning range, very narrow, between 417 and 418, the SPY levels. And again, with Hero rising, somewhat favoring longs. And I would say that order flow supported the same, with cumulative volume delta increasing. That's shown by the dark blue line. And then also stop orders. Buy stop orders shown by the rising orange yellow line. Then on the other hand, it looks like the larger traders with iceberg orders had the right idea. They were fading this move higher. So they were selling as the S&P 500 approached the 418 volatility trigger. So there is, for example, an execution of 1,000 contracts. It looks like 3 transactions. Those are iceberg orders that large traders use to hide their size. And there's 1,606. There's another one, 1,402. So larger traders were fading that move, while options traders were buying. All right, so that's the morning setup. Range day fades, both short at the 418 level, long. First one at the 417 level, then higher highs. And then price broke lower, and I was actually making launch, so I did not see this. Let's go back and take a look at Hero and see if there was any clue for this final move lower. And not really, other than Hero leveled off sometime later, so traders stopped taking positive delta positions, but that was after price already started to move lower. Let's just see what traders were doing. First of all, we'll break out puts and calls. So it looks like call buyers are still more aggressive than put buyers. I'm looking at the number over on the right side here. That's 3.8 billion positive versus minus 1.9 billion negative. So that is showing that traders are buying calls and buying puts. All right, let's take a look at 0 DTE and see if that provides any additional insight. And no, not really. So that is showing just trades, options trades that for today's expiration. Let's take a look at the total expirations. This is showing all trades, all expirations. All right, so not a lot of clue for Hero today, other than really kind of supporting the long fades up in the range day this morning. All right, let's take a look at NASDAQ now. So this is similar to the S&P 500, showing a combined signal of NDX and QQQ. So let's zoom in on this. And there's, I think, more clarity here. First of all, let's zoom in on the morning. So briefly, Hero supporting longs up until about 10 a.m. Rising Hero line. Traders are taking positive delta positions up until, again, about 10 a.m. And then Hero starts to move lower. It looks like price chopped around for quite a while. Let's go take a look at Bookmap for NASDAQ. to zoom in on the morning session here. And just like the ES, trading at a narrow range between two ETF levels, 336 and 337. And then after 10 a.m. we saw that Hero was trending lower, favoring shorts, as NQ made a series of lower highs until finally reversed. And let's scroll over a little bit. Until finally breaking lower and breaking below that 336 level about 12:30. So that's the NASDAQ. Again, let's go. So if you're using Hero as kind of a one of the signals, primary signal for trading. Remember, Hero is rising up until about 10 a.m., so supporting longs up until 10 a.m. up to the 337 level, and then supporting a short at the 337 level. So it looks like the best trade was probably to buy a put, buy the 337 put. Although on a low volatility range day, I generally don't. If I buy a put, I'm looking for big movement. All right, so that is that's the NASDAQ. Let's take a look at a few stocks, and then we'll come back and take a look at the live market. First stock I want to take a look at is Amazon. Let's go take a look at Hero, and we'll see that call buyers were driving price higher in Amazon. Separate out puts and calls. I'm going to zoom in on this. So up until about noon, so traders were buying calls, shown by the rising orange line, and they were also buying puts. Call buyers were winning, and that helped to drive price higher. When traders buy calls, market makers sell calls, and they have to buy stock to hedge their delta exposure, and that can drive a price higher. So that's Amazon, and the next one is Meta. Back to the total signal. So first of all, notice Meta here. This Hero signal, and that is showing a weak Hero signal. What this is showing is that the Hero signal for today is the weakest that it has been in the last 30 days, and that may be difficult to see. That's a light gray on this black background showing the range within the last 30 days, that entire length of the slider. And so it is the low end of the last 30 days, and then the colored portion shows the range of the Hero signal in the last 5 days, and this is the Hero signal for today is also within that range, and it's just basically at the low end. So we know that the Hero signal for Meta was weak today. So that's what I was looking at. And now let's go take a look at Hero for Meta. Zoom in on this. And this is what I was looking at in the morning. So note the call wall. Also the key gamma strike at 250. And Meta jumped right up to that. Let's zoom in on this just a bit. So what I saw this morning was pretty much lackluster options trades as price zoomed up to that call wall level. And then this alert fired off that Meta had breached the call wall. And that typically, the call wall is expected to act as resistance. So that got my attention. So now notice that Hero starts to shift lower just a couple minutes later. Let's go take a look at Bookmap. So Meta's been up and down. So what I'm looking at, and this was just a clear setup from this morning. And again, remember, kind of lackluster options trades straight up to the call wall resistance level. And then let's zoom in some more. Note the shift in order flow at the call wall. Look at all the pink volume dots. Sell a buy sweep shown by those very small green dots up to the 250 call wall resistance level, and then the aggressive sellers come in. You can tell that with the large pink volume dots. Those are market sell orders. Traders selling that 250 level. So a short setup there in Meta. And another one, let's take a look at NVIDIA. Let's go back and take a look at Hero. So there's Meta, really Hero supporting, and you know, the way I see this, more short setups. And let's go to NVIDIA. And NVIDIA, I also see this as confirming shorts. So let's zoom in on the morning session. So a couple things to note here. First, this looks like somewhat of a divergence. So Hero starts falling before price falls. Then as price increases, again somewhat lackluster trade up to a certain point. Then a couple of large block orders shown by those vertical lines drives price up for another short as Hero continues to fall. All right, so let's go take a look at Bookmap. I'll just draw that with this line. NVIDIA makes a series of lower highs, then breaks this wedge pattern. Whoops, wrong tool. Pulls back, gives another opportunity for a short as Hero oscillates up and down, but order flow definitely negative there. Notice all the pink dots, aggressive sellers. All right, so that's NVIDIA. We'll take a look at Tesla, and then we'll go to the live market. And let me know if you have any stocks that you want me to take a look at. Any other stocks than the ones that I've looked at. All right, here's Tesla. Let's take a look at Hero. And as usual, there's a very strong correlation between hedging flow and price action for Tesla. And in the morning, the move up was driven by call buyers, shown by the rising orange line. And note the number here. So in the morning up until about 11, positive 144 million versus minus 49 billion for puts. So traders, call buyers were winning 144 to minus 49. And you could just tell that by looking at the strong correlation between the price action and call buyers. All right, so let's go take a look at Bookmap. And there's the strong move up in the morning in Tesla as traders were buying calls. All right, note that price starts to roll over somewhere between 10:45 and 11:15, and let's see what impact options traders had on that. All right, so notice that around 11:15, traders stop buying calls, and they start selling calls. Orange line rises, and price stops rising and starts falling. And continues down. So now the total call signal for the day, the net, is minus 38. So net for the day, they are actually selling calls. Buying calls in the morning, they stop, or around 11:10, 11:15, start selling calls, and price moves lower. All right, again, let me know if you have any stocks that you wanted me to take a look at. Otherwise, we'll take a look at the broad market. So, the only thing I can discern from this is that, so the total signal for Hero is still positive, but starting to trend lower. Let's take a look at Bookmap. Take a look at order flow in Bookmap. Go back to the S&P 500. And note the iceberg orders continue to be negative. And this is Kenobi. We'll take a look at Palantir. I don't have that in Bookmap, but we'll take a look at Palantir with Hero in just a minute. All right, so this is the S&P 500. I think one of the key takeaways from today are the large traders with iceberg orders. And note this number now. This is the cumulative for the session, and I start my session. Actually, this is MBO data, so my session started around 7 a.m. when I opened Bookmap. So that is accumulated iceberg orders from about 7 a.m. Eastern Time, and that's 23,000 minus 23,000, around 550, 23,549 right now. That is quite large. I don't think I've seen a number that large in quite some time. So large traders are in there aggressively selling with iceberg orders they use to hide their size. Very interesting. And also stops. That number is also negative at about minus 4,000. Cumulative volume delta is still positive. And that's actually accumulated from when I get backfill data, I believe. Backfill data goes back to the open yesterday evening. So now the S&P 500 ES is trading down below the SPX 4150 absolute gamma strike. That was noted as the second level of support in the Spotgamma AM Founders Note, a more substantial level of support than the 4170 level. And price continues lower. Notice now first of all, this 417 level did act as resistance, sort of. Price never reached that level. And then the 416 level acted as resistance. Price sliced right through the SPY 415 level and is now down at the 414 level. I love this. This really helps my long-term position. All right, so let's take a look at, we'll go to Hero and take a look at Palantir, and then we'll take a look at the NASDAQ. So there you go, Kenobi. There's Palantir. Very strong correlation between options trades, hedging flow, and price action. And call buyers are in charge. Shown by the strong correlation between the orange line and price action. And note that when traders stop buying calls, start selling calls, price starts to move lower. All right, let's take a look at NASDAQ. And overall a negative signal today for NDX and QQQ. And again started to move lower just after 10 a.m. Eastern Time, trending lower. And now price is really moving lower. Let's go take a look at Bookmap for NASDAQ. Notice again price is trading below the lower edge of the expected move for the day, shown by the dashed blue line. So while I've been talking today, there were good short setups. First of all, at the lower edge of the expected move for the day, and then the 335 key gamma strike, absolute gamma strike for QQQ acted as resistance. And then it looks like temporarily the 333 acted as support. All right, so RJ points out the VIX is up 10%. Let's check on that. Wow. So the VIX made it up to 19.31. Now seems to be rolling over just a little bit. Now for NASDAQ, it looks like some larger traders are coming in and starting to buy with iceberg orders. 175 contracts, 145 contracts. So NDX is still above its volatility trigger. SPY and SPX are below their volatility triggers. And then QQQ is also below. All right, so RJ says great divergence with NAS. So are you talking about Hero? Let's see. So it looks like yes. So good spot. So it looks like now options traders starting to take positive delta positions. As NQ reversed higher at the 333 level, and also again large traders were coming in with iceberg orders. Let's take one last look at the S&P 500, then we'll call it a day. So it doesn't look like as strong a bounce in the S&P 500. But it looks like larger traders were buying with iceberg orders. Yeah, maybe so. Let's go take a look at Hero for the S&P 500. So options traders still playing the bounce in the NASDAQ. S&P 500. Not really. Hero still trending lower. And potentially just setting up a pullback to take a short. All right, my time is up. It turned out to be an interesting afternoon. Remember, tomorrow the FOMC minutes come out at 2 p.m. During my session. So we'll go through positional analysis, and then at 2 p.m. Start looking at the futures for setups. All right, thank you everyone. Thanks for your questions and comments. And thanks for watching, and I'll see you tomorrow. Bye.